markets are not divorced from macroeconomic reality. That's, of course, any price could be divergent from macroeconomic reality for periods of time. We've certainly seen plenty of that in our careers. But part of what ends up happening, what ends up eventually driving asset prices is the macroeconomic reality. For instance, let's not forget, there was like 7 cuts priced in for the U.S. for 2024, right? But what policy actually transpired ended up being, isn't divorced from the macroeconomic reality that occur, right? That's the corollary. And so the same is true for companies and stock prices. Of course, there's bubbles, there's busts, there can be divergences, but ultimately, stock markets are made up companies. Companies generate cash flows. They generate earnings. Those earnings are purchased on certain multiples. And so you can start to think about what are the ranges, and those earnings are a function of sales. Those function of sales is a function of economic expansion and whether they can pick up market share in the economy. And so you can start to think about, what are reasonable expectations in terms of what you'd expect.